What's up everyone, it's Scotty with MoneyVest. So in this video we are going to be talking about Philip Morris, and that is one of the largest producers, manufacturers, and sellers of cigarettes, e-cigarettes, and of course tobacco products. And a lot of you guys have been asking for an updated analysis and a video on this company, and that's exactly what we are going to do in this video. As always, if you enjoyed this video, find it helpful, make sure that you drop a like, subscribe to the channel. If you haven't already, I would really appreciate that. And of course, links to our Discord and Patreon is going to be down below if you're interested in joining, getting access to all the members-only private videos, access to all the Discord channels, trade alerts, ideas, buy and sell alerts. The 16% annual discounts available for a few more days, and I've opened up a couple more spots if you're interested in joining. So links going to be down below, and feel free to ask away if you have any questions. So when it comes to Philip Morris, they are engaged in manufacturing and sale of cigarettes and smoke-free products in more than 180 markets all around the world. There are going to be some pretty sad statistics right now that I'm going to go over for our analysis of this company. But our brand of portfolio is led by Marlboro, of course, the world's best-selling international cigarette. Our leading smoke-free product, IQOS, it's typically marketed with consumables under the brand names Teria, Heats, and others. And based on the strength of our brand portfolio, we enjoy a robust pricing power as well. Marlboro brand power 2.5 times stronger than the closest competitor. So as I'm sure you know, that it is one of the most recognized cigarette brands in the world. And this right here are going to be their smoke-free products as well, including tobacco and whatnot, that nicotine pouches that they also do sell. I mean, it's kind of an interesting company to be looking at because, of course, we all know how dangerous and unhealthy these products can be, but people are, unfortunately, at the end of the day, they are addicted, right, to a lot of these things. And rapid progress in smoke-free transformation. So this right here, 18% volume contribution in internationally oral smoke-free, 16.5% year-over-year as of the year-to-date September 2023. And this right here, smoke-free net revenues, 35.4%, $9.3 billion year-to-date as of September 2023 as well. So this right here has been the performance of Philip Morris's stock, which has underperformed the S&P 500. But at the same time, the company also is a very strong dividend player. And our 2023 third quarter results reveal our continuing progress. So they are going to be reporting for the fourth quarter very soon. But as of third quarter, 36.2% of the total net revenues for the quarter came from smoke-free products. So definitely more and more transition over to smoke-free products here. And 19.7 million estimated number of adults that have switched to our heated tobacco products, IQOS, and stopped smoking as well. So that's, again, very, very good, and it's kind of moving in the right direction. 82 markets where our smoke-free products are available, and $10.5 billion invested to develop scientifically, substantiate, and commercialize smoke-free products since 2008 as well. When it comes to the third quarter and all key metrics, shipment volume was up 2.2%, net revenues up over 9%, operating income up a little bit over 11%, and adjusted diluted earnings per share up over 20% as well. And this right here is going to be their acceleration in organic growth, which continues. So 11% growth on a year-over-year basis in the third quarter 2023 for the company. And total market share momentum, when it comes to cigarettes, over 24.3% as of the third quarter. So about 40 basis points or 4.4 percentage points increase. And HTUs, 4.6%, also an increase of about 0.5%. So total market share now at almost 29% for the company when it comes to this market, and year-to-date sitting at a little bit over 28.3% for the company as well. Now, when it comes to the outlook for the entire 2023, they are expecting net revenues growing at over 8%, adjusted diluted earnings per share to grow about 10 to 10.5%, nicotine pouches shipments in terms of cans, 390 to 410 million cans, I believe that's the number, and HTU shipments in units, 125 to 127.5 billion units is what they are expecting as well. This right here is, again, one of the more sort of sad statistics. The number of smokers, it is estimated that 1 billion people worldwide will continue to smoke in the foreseeable future. That's a lot of people. That's a lot of people that are actually smoking. So the market's pretty big for Philip Morris, right? So the total addressable market for Philip Morris consumable tobacco, around $800 billion in global retail sales. Potentially declining. We got smoke-free products upwards of $300 billion globally, according to some analysts, and increasing. And of course, wellness and healthcare, difficult to quantify at this stage, but potentially a much larger market than tobacco as well. So definitely a little bit over $1 trillion market for Philip Morris that they are operating in. So when it comes to the revenues and profits and earnings, I mean, this is about as stable as it gets from a company standpoint, because it has been a very stable stock at $31.2 billion in revenue, growing that to over $34 billion. Gross profits gone from $20.8 billion to $21.7 billion. So again, we haven't seen a lot of growth, but it's been fairly stable, as you can see over here with these histograms. Operating income is also gone from $13.8 billion to well over $12.1 billion as well. This right here is going to be the net income. So you'll notice it's gone from $8.5 billion to $8 billion. So again, very, very stable, very, very flat, but it's been very consistent, and that's what this business offers. And dividends have also increased. Dividend per share, as you'll notice, has gone from $3.58 to now over $5.11, and profitability is also there with earnings per share. It's gone from 526 to 515. So again, not really growing, but it has been fairly stable for the company, with shares outstanding also very stable at 1.6 billion, going down to 1.55 billion. So it's not really a growth stock. It is a very, very, very value / dividend stock here. And balance sheet, of course, is not the best. It is, in fact, one of the worst balance sheets I've seen in a long time, because current and quick ratio is less than 1. The company does have more debt than cash on the balance sheet. As a result, the net debt is $44.7 billion, and we've got a debt to free cash flow sitting at 12.6. We look for this number under 3. It is 4 times that. Current ratio, we look for this number over 1, but right now it is not. It's anything but. And of course, the company does have a lot of debt relative to cash. Now, valuation is quite reasonably low, considering that it is, at the end of the day, a value stock. So price to earnings, 15 to 18 times. Price to cash flow, 14 to 16 times. Price to sales, trading at a little bit over 4. And price enterprise value to EBITDA, sitting at 13 to 14 times. So valuation is quite reasonably low for the company. And profit margins are also pretty solid. We're looking at over 60% gross profit margins, net margins over 23%. Return on capital and assets is also pretty good at 12 to 25%. And profit per employee, profit per employee here, $100,000 is what they are generating. When it comes to earnings expectations, from $6.11 to over $8.17. And that is going to be a growth rate of about 7.5% for Philip Morris. So if we do some very simple analysis of, let's say, 611 is going to be that actual earnings, 1552 times 611, we're looking at just under $9.5 billion in profits in net income for the entire 2023. We plug that number in, grow them by 7%, give them a, let's say, 20 or 18 times PE multiple, discount rate of, let's say, 6%, because the company does pay out a pretty solid dividend. So if you come over to Philip Morris, you'll notice the dividend yield is 5.4. So maybe we can give them a 6.5% discount rate. Margin of safety, I'm going to go a little bit higher, considering the balance sheet's not that great. And share dilution of -1%, because the company has been buying back shares. We arrive at a fair value exactly where the price is trading right now, about as close to as we can get at $94, $95 per share. And this right here is going to be that sensitivity grid. Now, if you do believe that, okay, let's just go with 5% growth rate, because the net income over the last 10 years has not really grown. So let's just go with 5% growth rate and slightly lower P multiple of 16. Now we're looking at least a 20% downside for Philip Morris, which I think is going to be a lot more reasonable. And of course, the dividend yield will go up the moment it drops down over 20%. So this right here is going to be the entire sensitivity grid, and I will be a lot more comfortable at $76, $77. Now, I do understand there might be a moral or ethical standpoint that investors may have, that they don't want to own a stock for a company that actually sells products and services that kills and kind of hinders the health of individuals. Totally understand that. And this right here is going to be a much, much stronger area of support for Philip Morris. So this is an entire area of demand for the company at around $78, $79, kind of in line with my fair value on the stock as well. And a very, very strong area of resistance sitting right over here at around $95, $96 per share. So that right there is going to be that resistance. Of course, support level is going to stay put down to as low as $78, $76. And this right here is really the level that I will be watching for Philip Morris. Another really important support to watch is going to be right there at $86. And it's really just been consolidating sideways. As you can see, a much broader range is going to be this right here, consolidation. And then a much smaller range is going to be this right here, where it's consolidating sideways in between that range. So first support, 86. My fair value, 76. And a huge resistance at 95. So that's the overall analysis. Let me know your thoughts down in the comment section below. And what do you think about Philip Morris? And what are your thoughts on this company? Again, it's a very value / dividend stock. Not the best balance sheet, pretty stable revenues, pretty stable margins, pretty stable business overall with some good dividend yield of over 5.5%. With my fair value at 76 and a very strong support at 86 and 75 as well. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like, subscribe to the channel. Let me know your thoughts down in the comment section below. And as always, happy investing. I'll see you all in the next video.